Hi, I'm Dan Wilton, the CEO of First Mining Gold. First Mining is developing two of the largest undeveloped gold projects in Canada, our Springpole gold project in Ontario and our Duparquet gold project in Quebec.
Good to see you here.
Good to see you. Pleasure as always.
We've made it. The end of the conference.
End of conference season, although not the end of the travel schedule.
No, poor thing. Been pretty good over there, right?
Yeah, I was very surprised at the number and quality of investors that we've seen. Historically, it's been a little more challenged at this conference. You know, it's been a bit more like supplier and government focused, but lots of investors coming through. And we built quite a good investor base here, both institutional and kind of high net worth retail.
Well, I think what we're seeing is the kind of gold funds waking up again. They've been away for a few years, certainly here in London and across Europe, but generalists coming in. There's some names I've not seen before. Are you talking to any of those?
Yeah, starting to. I mean, for us, we're still unheld by the specialists. So we're starting to see some of the larger dedicated gold funds. Part of it is, our market cap kind of went over 250 US, and you're all of a sudden on screens. Our company screens really cheaply based on sort of a dollars per ounce or jurisdiction or sort of advanced stage of assets. So, I think we're moving from this period of rampant active disbelief in what we're doing to, these catalysts that we're talking that are coming up, particularly for Springpole, are like 6 months away. So
and I think that's apparent in what we're looking at the share price going on at the moment. Obviously, people are starting to believe in the story. Just sticking with the macro for a little bit longer. Gold at $4,200. That's exciting for everyone. What it does for you as a company, you've told us in the past, every $100 the gold price goes up. That has a big impact on your economics.
Yeah, $250 million of after-tax NPV. I mean, we put out our updated prefeasibility study a couple of weeks ago, and we had 3,100 gold as our base case, and we put a spot case at 4,200. The difference in NPV in those two cases is 2.1 billion at 3,100, and it's 3.8 billion at spot. Like that $1,100 in gold almost doubles your NPV. So massive impact.
All upside, very little impact on the bottom.
It's all the costs are identical.
Yeah. Okay. So that's the backdrop. Now let's get into you, because I think it's a period where I think you've done quite a bit in 2025, quietly paddling away under the water, but it's kind of gone unnoticed. But 2026 is a kind of culmination of a lot of that, including the environmental, obviously, which is the kind of big hurdle for you. So when's that due?
Environmental assessment, we're targeting that decision late Q1, early Q2 on the federal side, and likely a couple of months after that on the provincial.
Right, and just again, remind people why that's important. What does it release?
So what that releases, it's basically the main government approvals for the concept of the development project at Springpole. And that's important because Springpole, obviously the deposit's sitting in the Bay of a Lake. There's always been that perception issue of that's the one where you have to drain the lake and you're never going to get a permit to do that. So, obviously all the work's been done. Got 15,000 pages of a final environmental assessment. We've been socializing this with levels of government and with Indigenous communities around the project since 2022. Final EA went in November of last year. We've been through a public comment period. We're largely through the comment response period. And everyone's kind of lining up for that decision period, which is now coming up again, late Q1, early Q2.
Right, so people are believing the ability to do it. There's precedent. Lots of people.
Lots of precedent.
Lots of precedent there. And they're understanding the kind of not remediation, but the restoration at the end of the project. That's all part and financed in what you're doing as well. So everyone's getting that.
I think it's starting to resonate. And the other thing that's resonating is, we're here with a number of other, not just development projects, but provinces that are here. Ontario has a big delegation here and talking about speeding up permitting in Ontario and talking about the importance of mineral development in Ontario. So, I think we're benefiting a bit from that too, and that there certainly has been, because of the tariffs and everything else, there's been quite a shift in public perception, and I'd say a shift in public willingness to see the rapid advancement of development projects.
Right, okay. let's break it down into the projects. Springpole,
Yeah.
feasibility study, just remind us of the numbers.
Updated PFS that we put out a couple of weeks ago.
Yeah.
Upfront capital, 1.1 billion US at a $3,100 gold price. It's a 41% IRR and a 2.1 billion after-tax NPV. All-in sustaining costs sub $1,000.
Okay, how does that project get advanced?
Well, that's the question. So first, we got to get through the environmental assessment approvals. Still, doing a lot of work with the Indigenous communities around the project, and it's our goal that we're driving toward an agreement with those communities.
Yeah.
You get through that EA. The EA then unlocks the ability to go apply your detailed engineering and go apply for your construction permits. That process is another 12 to 18 months. So you really are looking at finishing a feasibility study probably late in 2026. And we've got the work program all set up to do that this winter, collect the last of the data that we need. Towards finishing a feasibility study in late 2026, and then in 2027 you're looking at project financing towards a construction decision late 27, early 28.
Build 24 months?
Yeah, a little bit more.
36
There's
months.
some seasonality to it depending on when
Right.
you can start, because you have to build the dikes and dewater the basin. Most of that can happen in 1 year.
Yeah.
But if you start that in September or October, then
Okay, so it's a ways out. Remind people, what are we investing into? What type of company? Are you guys builders?
We don't have the team right now that has
Right.
built a lot of things. So, listen, I think when we get through the environmental assessment, there's a couple of times that you might want to talk to the industry about maybe a willingness to partner with us. I think our goal would love to see an industry partner come in on the project. And, First Mining could become Canada's version of Gold Road, right? Which is a pretty attractive, very similar project in Australia, 5 million ounce project, 300,000 ounce a year production. And they ended up, having a partner come in, build that mine, and then retain 50% of it. The partner then came to buy them 3 years later for $2.5 billion.
Right, okay.
So-
Let's do Duparquet, and then we'll
Yeah.
come back in terms of how do we value all of this. Okay,
Yeah.
so Duparquet update, PEA stage, so
PEA stage.
what's those numbers?
Lots of the PEA numbers show a project that can produce 230,000 ounces a year. It's one of the highest grade open pits in Canada. Average grade about 1.35 grams. A combination of open pit and underground in those numbers. Upfront capital that we scoped in 2023 was a little bit more than 500 US. For that kind of production, it's actually one of the most capital efficient projects I think that you could design, that we've seen
Yeah.
in the industry. And we don't really get any value for Duparquet at all, despite the fact we've got 3.5 million ounces of M&I, 2.5 million ounces of inferred, sitting in the middle of the Abitibi Gold Belt, 50 kilometers down a paved highway to a smelter. So, I think it's one of the best located projects. We continue to drilled about 18,000 meters there this year. We are finding gold in every drill hole and expanding resources. So we see a really clear line of sight on how that becomes something more like 10 million ounces.
Right. Is it the same mentality in terms of the business strategy for that? You'd like someone to come in and help you fund a build there?
No,
Or is
not
that
not
what
there.
you
No,
would-
I don't think.
You can do
think
this.
for everything that we need to do at Duparquet between now and a construction decision. I think we're well set up to do it.
Okay.
We've got a supportive local community that we signed a really important agreement with this year to basically develop the town and develop the mine together. So super important in Quebec, and we've started the sort of long-term environmental baseline data collection. So by the end of 26, I think we have a good sense of that environmental baseline to go really support the project design and development. I think at the end of 26, we should have most of the information to update a pre-feasibility study. This project was taken to PFS in 2014. So some work to update that, but we can get all that data collected. And then, in Quebec, if we're through a PFS and feasibility study in 2027, you're submitting that into the environmental assessment process there. So a goal would be you could be at a potentially at a construction decision in Quebec 2030, 2031.
Okay, fine. And let's deal with the rest of the portfolio. There's some other, because what you've done through the period of your tenure has been monetizing other portfolio assets,
Correct.
either spinning them out, selling them, or etc.
Yeah.
Obviously, Pickle Crow, obviously with Firefly at the moment, they're not doing too much with it, but it has some future value to you.
I think it has a lot of value. We still own 30% of that project. It's 3 million ounces, one of the highest grade undeveloped gold projects in Canada, beside amazing amounts of infrastructure where they mined, more than 1 million ounces at an average grade of 16 grams. Like, it's an amazing area.
Yeah.
We still own 30% of it. 20% of that interest is carried to a construction decision. Right. So at some point, our friends at Firefly have talked about maybe spinning that out and having a separate entity that could do some work on it. Yeah. So we'll see. But I think it's in this environment, it's something that should attract the capital to move it forward.
Right.
Lots going on in the region too, particularly since Orla bought the Musselwhite mine from Newmont.
Yeah.
It's 150 kilometers to the north. Musselwhite has some mill capacity. It's not that far to truck high grade.
Okay, so we'll phase that in at some point when you kind of work out whether you spin out the earn-in.
Yeah. We did that once before. I think ultimately we'd like to go down a path. If we were going to monetize it, we'd likely look to, increase the value.
Okay, and then you've one other, which you can...
With our Cameron project,
Absolutely,
it's we announced a new partnership on that a couple of weeks ago with the Fiore Group, which is Frank Justra and Sean Kuhn from Dolly Varden, and great group of people involved. So they've gone out to raise $15 million. We'll take 5 of cash and then own 48% of the company going forward. So a couple of seats on the board. And, we love Cameron. It's a great resource. We have consolidated the land package around there over the last few years. But with Springpole and with Duparquet, we just find that it was never really going to get the attention from our team, and we didn't really have the capital to move it forward on a dedicated basis. So found a partner who was very interested in moving it forward. It's the same group that's done a lot of the financing and backing of Next Gold, which is actually looking at building a mine and mill in Dryden, which is only about 100 kilometers away. So lots, I think there's resource growth opportunity at Cameron. There's an existing development scenario there. The project was taken to feasibility in the 80s and 90s. It's got a ramp down 300 meters, developed into the ore body on 3 levels. Like, it's a really advanced stage project. And again, we really like it. Just for us, having a dedicated team to move it forward was the right way to start surfacing.
Okay, look, so I don't want to get into the weeds on each project in this kind of setup. It's really say, look, help me understand how this thing moves forward. Like, the timelines you're suggesting, it kind of weighs out. And if it was predominantly retail, they're thinking, wow, that sounds so far away. And you've had that problem your whole time, the whole tenure, right? So, but what we talked about at the beginning was meaningful deliverables next year, which people should read the signal there and go, this creates long-lasting value as industry see it.
Absolutely.
So, for like, if in the case of Springpole, an industry partner coming in, they'd want that in place before they even committed to in any way, shape, or form. Duparquet as well. It's a long lead item, for most retail. So, how do I start valuing? How do I start compartmentalizing the value that you're bringing to the company as a whole? However you want to break down the projects. Well, because I need to be committed for the long term to see real returns on this thing.
Well, I think that sort of surfacing of value is going to come with us getting to the end of this environmental assessment process.
That's a biggie.
That is the biggest catalyst that we will see in this company, probably from the time that it was formed. And it has everything to do with the perception of that project. And the reality is we're trading at about $30 an ounce in the ground right now. And our advanced stage peers in Canada are trading at $150 to $200 an ounce, right? So people look at our stock price chart and they say, well, clearly we've missed it, right? It's up 4x this year. The reality is it's up from $7 an ounce to $28 an ounce. Right? Like, you haven't missed it. Relative value, you can still see a very clear and compelling track from where we are here today with large-scale projects, which are facing significant scarcity in the industry. Like there's maybe 3 projects in Canada of size that you can get a shovel in the ground before 2030, and Springpole is one of those. So I think we've started to see kind of the value, the scarcity value of these large projects. We saw Probe obviously, take a bid from Fresnillo for $780 million for their project in the Abitibi, which is not much further advanced than Duparquet is in terms of like permitting and data collection. Great resource, and a great exploration team that was around it. But there are fewer and fewer of these opportunities on the table for companies that they all want to own a big mine in Canada, but none of them want to permit a big mine in Canada. So that's why I think getting to that EA milestone is such a huge thing.
That's taken you how long? What was that?
We entered into the EA process in 2018. So by the time it's all done, it will be 8 years. Now, could we have done it more quickly? We went through COVID in that time. Sure. It's not easy to advance things. I would tell you we didn't really have the right team on it until I'd say late 2020 when we brought on Steve Lines and our team who had done the previous 6.5 years permitting the Greenstone mine, which is now built and producing for Equinox Gold.
Yeah.
So yeah, a combination of prior to late 2020, it wasn't properly resourced, with human capital or financial capital.
Yeah.
It's been fully resourced in this time and moving it forward. So, they're going to try and shorten timeframes in permitting decisions in Canada, and we really welcome all the announcements from Ontario and Quebec about how, harmonizing from Impact Assessment Agency of Canada, how they're trying to really stick to a limited jurisdiction and agree to be substituted out in new projects. All that's positive, but the reality of developing projects in Canada is that it takes time. And particularly when you're working with Indigenous communities, those communities need to have the capacity to participate in these projects early in the development stage of the project, because you can't legislate a time frame to build a relationship, right? So yeah, I think it's all kind of coming together, but to us, with that EA approval and with agreements with communities and line of sight on those agreements, I think it puts this project in a very, very rare position in terms of its executability going forward. And that has value. That has a lot more value than $30 an ounce in the ground.
I look forward to you executing the plan in
Indeed.
2026, because I think that move from $28 to near the 100, 150 level, a big piece of it coming through Q1, Q2 by the sounds of it, but there's a lot more behind that. Good luck.
Lots more to come. Yeah. No, we'll keep our head down.